Ladies and gentlemen, good day and welcome to the Q3 FY24 earnings conference call of Brigade Enterprises Limited. We have with us today on the call the management of Brigade Enterprises Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. M.R. Jaishankar, Executive Chairman. Thank you, and over to you, sir.
Thank you. Good afternoon, ladies and gentlemen. Welcome you all to the Brigade Enterprises Q3 Financial Year 24 earnings call. I am joined by our Managing Director, Ms. Pavitra Shankar, and Joint Managing Director, Ms. Nirupa Shankar, our Executive Directors, Mr. Roshan Matthew, Mr. Amar Mysore, Mr. Pradyumna Krishna Kumar, CFO Atul Goyal, and members of the senior management team. I am happy to share the following highlights. We are happy to report that we have witnessed healthy growth across business verticals and have recorded the highest ever quarterly sales of rupees 1,524 crores. Our revenue has grown by 41% and profit after tax is up by 31% in comparison with Q3 FY23. The residential business is riding on a wave of favorable conditions supported by a strong launch pipeline for the next 4 quarters. Our office business recorded the best leasing quarter post-COVID and aim to finish strong in the financial year. Furthermore, our commercial leasing business has seen good traction and hospitality has continued to show very good traction. With a robust pipeline of launches in Bangalore, Hyderabad and Chennai, we are confident that we will sustain the momentum. We have witnessed MOUs with the government of Tamil Nadu to invest rupees 3,400 crores in the state with a potential employment for around 25,000 people in our projects over the next 3 to 4 years. The MOU with the CMDA, which is Chennai Metropolitan Development Authority, is for Brigade's expansion in Chennai and setting up 2 high-rise residential buildings in the IT belt of Sholinganur with an investment of about rupees 2,000 crores. The second MOU with the government of Tamil Nadu ELCOT agency, which entails an investment of around 1,400 crores for high-rise commercial and residential developments across different micro markets, including Mount Road, which is now known as Anna Salai. Coming to the residential business, in the residential market, we are pleased to report robust growth both in terms of pricing and sales volumes. Next launches and under construction projects across all sub-markets are witnessing good demand on ground with customer walk-ins and interest generated from digital leads despite more efficient marketing spends. Customers are willing to spend for more comfortable floor plans, the extra bedrooms and improved specifications, which has also contributed to acceptance of the price increases taken across the portfolio. Notably, Q3 FY24 stands out as a significant quarter, achieving our highest ever quarterly realization with a net average price realization of rupees 8,940. Our sales performance reaching 1.65 million square feet represents the strongest third quarter performance compared to previous financial years. Looking forward, we are optimistic about maintaining this positive momentum. The new launches slated for the final quarter will contribute considerably to ending the financial year on a strong note. As regards office segment, we achieved the best leasing quarter post-COVID, leasing 500,000 square feet in Q3 FY24, resulting in an impressive 95% occupancy rate across our portfolio, including our SEZ projects. Substantial leasing was done in Brigade Tech Gardens, which is an SEZ project, closing large-size transactions with marquee tenants. The office leasing revenue also witnessed a substantial 52% year-on-year increase, rising from rupees 105 crores to rupees 160 crores, while maintaining a stable rental collection rate of 99%. With sustained momentum in leasing inquiries, we have an active pipeline for Q4 FY24, positioning the company to conclude the financial year with robust leasing performance. The office sector's demand is expected to remain stable in Q4 FY24 and Q1 FY25, with a projected uptick in Q2 and Q3 in FY25, led by a clearer outlook on the global macroeconomic situation, return to office mandates by companies, and an increase in business to Indian IT software companies. Coming to retail, Q3 FY24 marked vibrant celebrations of Diwali and Christmas. Our malls saw an increase in footfalls by 8% over the same quarter last year, accompanied by the highest vehicular entries in December 2023 for 2 out of our 3 malls. Categories such as athleisure, jewelry, spa and salon witnessed a substantial 25% growth. In the F&B category across all malls, there was a 10% growth in Q3 FY24 year-on-year, despite a decline in the multiplex category due to the lack of blockbuster releases. As regards hospitality, Q3 FY24 saw the hospitality SBU sustain its growth momentum. We have witnessed improvements across various performance metrics, surpassing both revenue and profit figures from the same period in FY2023. Notably, revenues have surged by an impressive 22%, ARRs have shown a 7% increase, and occupancy has experienced an 8% increase. As a result, adjusted gross operating profit has seen an 18% increase compared to Q3 FY23. Looking ahead, we have a lineup of corporate travel, conferences and social events in the coming period, which is expected to contribute to sustained overall business growth and a robust Q4. This brings me to the end of our operational highlights. Now, our CFO Atul Goyal will take you through the financial highlights. Thank you.
Thank you, sir, and good afternoon all. On behalf of the company, we welcome you to the earnings call of Q3 FY2024. Chairman has already shared operation highlights. I'll be sharing some key financial highlights for the quarter and for 9 months. All verticals, as Chairman said, has been doing very well, and there has been a steady performance in Q3. The real estate segment clocked a turnover of 839 crores, which is grown by 50% from Q3 FY23. EBITDA stood at 73 crores. The leasing segment clocked a turnover of 247 crores, whereas the same for Q3 FY23 stood at 199 crores, a 24% increase in leasing revenue. EBITDA stood at 179 crores. The hospitality segment clocked a turnover of 123 crores as increase of 22% from the same quarter last financial year. EBITDA was 45 crores. EBITDA margin stood at 36% in Q3 FY24. The consolidated revenue for Q3 FY24 stood at 1208 crores as against 859 crores in Q3 FY23 with an EBITDA of 296 crores. EBITDA margin stood at 25%. Consolidated PAT after minority interest for Q3 FY24 is rupees 74 crores. Total collections in Q3 FY24 stood at 1394 crores. Cash flow from operating activities stood at 266 crores during Q3 FY24. Coming to 9 months performance, revenue for 9 months was 3,301 crores, increase of 23% as compared to 9 months FY23. EBITDA for 9 months FY24 was 869 crores, which is increased by 16% as compared to 9 months FY23. Collections for 9 months stood at 4,078 crores with cash and operating activities of 985 crores. Coming to debt and liquidity position, we continue to have adequate liquidity and undrawn credit lines from financial institutions. Our average cost of debt has been at 8.73%, an increase of 108 bips, though repo rate has increased by 250 bips since May 22. Gross debt of the entity stood at 4,337 crores. The cash and cash equivalent was 1,562 crores as on 31st December 23. Consequently, the company's net debt outstanding is 2,775 crores, out of which BL share is 2,115 crores. Almost 80% of the debt pertains to the commercial portion, which is backed by the rental income. Debt equity ratio stood at 0.69 as of December 23. Thank you. Over back to the moderator for questions.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may please press star and 1 on the touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Karan Khanna from Ambit Capital. Please go ahead.
Yeah, thanks for the opportunity and congrats on a record ASP for the quarter. My first question is on the success of your new launches. You launched Brigade Sanctuary 2 million square feet during the quarter. With volume pre-sales at 1.7 million square feet in this quarter, just wanted to understand the contribution of Brigade Sanctuary in this number.
Hi, Karan. Yes, actually, from our total sales volume that we did, at least 50% of it came from new launches, and Brigade Sanctuary was one of the highest contributors towards this.
Sure. So as a follow-up, how should one think of the 10.8 million square feet launches that you're targeting over the next 12 months, Pavitra? And what I'm trying to get to is sort of the conversion of these launches into pre-sale. How should one think about that?
Yeah, so the 10.8 million, again, it's across Bangalore, Chennai, and Hyderabad. 3 of those projects are in Chennai, and 1 is in Hyderabad. So we're working into the pipeline as soon as possible. Couple of the Bangalore launches will move into Q1 rather than Q4. But Q4 also, we do have a good number of launches coming into the pipeline, and we already have RERA for some of them. So we should be able to see the numbers in Q4 itself. As we launch, I think our turnaround time is to get not just from a sales perspective, but also into bookings and agreements. So pretty quickly, you'll be able to see the cash flows coming into the numbers also.
Sure. And just as a follow-up, in the last call, you mentioned that, by FY27, you're targeting roughly 10 million square feet sort of a run rate. So far in 9 months, you've done 4.3 million square feet. So with the sort of tailwinds that you're seeing, do you think that 10 million square feet could in fact happen sooner than FY27?
So for the first 9 months, we've actually done around 4.8 million. And we have a substantial amount of the target assigned to Q4 because some of our launches were coming into Q4 itself. We're pretty confident that we'll be able to reach the number that we wanted for Q4, showing an expected increase over FY23 numbers for the whole year. And yeah, we're on track. I think a lot of the BD that we've done over the last year and a half or so is going to come into the pipeline, which is again why you're seeing that 10.8 million number for the next 4 quarters and over the following financial year as well. So as of now, I think we're on track. A couple more acquisitions where we can quickly get it into the pipeline should help us reach that.
Sure. My second question, if I look at slide number 27 of your investor presentation, you've spoken about the 1.06 million square feet of the hotel launch. So could you please reiterate the timeline for these launches? And as a follow-up, in terms of the sector, do you think that if this launch takes another 2 or 3 years, perhaps that's the right time to come on board with 1,000 odd keys at that point in time?
Yeah, Nirupa here. So we're looking to launch these projects in Q2 or Q3 of FY25 because there's a lot of momentum with the hospitality space. It will take at least years for the hotels to actually come into the market. We believe that this is the right time to continue to build on this portfolio.
Sure. And regarding these expansion plans, could you talk about potential partnerships that you're looking at in terms of the funding?
Yeah. So with regards to the funding, we're exploring various options. We're talking to various parties to determine what is the best course and way forward.
Sure. And lastly, Pavitra, if you could also speak about, aspirationally in 3 to 5 years' time, what sort of market share are you looking at in markets outside of Bangalore, say in Hyderabad and Chennai?
Yeah, so I think in the next 3 to 5 years, we're looking at our position in Bangalore naturally, growing our market share in Chennai and Hyderabad. We have the potential to do around 12 to 15 million square feet in Chennai itself in terms of the land bank. So that should start coming into our sales pipeline as well. In Hyderabad, as you know, we acquired the Neopolis land parcel, and that's a big project for us. It's about 2 million square feet of residential and mixed use for the remaining part of the project. So Hyderabad, Chennai are both key aspects of the market. We are still reiterating our commitment to focusing on these markets to give us the kind of depth across domains, whether it is residential, office, retail, and hotel, and to build on the presence that we have from a BD standpoint. That said, after reaching where we would like in each of these markets, I think we will start at least thinking about where else we can potentially examine. But Brigade has always been very clear. We'll make sure that we have the kind of presence in Chennai and Hyderabad that we do in Bangalore before we really start branching out substantially into any other markets. Naturally, we're also there in smaller markets like, say, Mysore and GIFT City, Kochi, etc., across the domains. But the focus will be on Chennai and Hyderabad to expand them similar to Bangalore.
Sure. This is helpful, Pavitra and Nirupa. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Adhidev Chattopadhyay from ICICI Securities. Please go ahead.
Yeah, good afternoon, everyone. So firstly, congratulations on the great performance for the quarter. So I have a few questions. Firstly, on the commercial leasing we have done for this quarter, especially in Tech Gardens. So when do the rentals start now flowing in, considering the rent-free period and other which tenants would have? And now would you say that we are on track to lease this entire portion in another couple of quarters, whatever vacant area we have in the other buildings? Yeah, that's the first question.
Hi, Adhidev, Nirupa here. For the large transactions that we did in this past quarter, about
excuse me, ma'am. Ma'am, I'm sorry to interrupt. There is some kind of breakage. Would you mind if I call you back on the same number?
Yeah. Adhidev, just to continue the response, I would say about 55% of the new leases we should expect to get the rentals starting from Q1 of FY25. There is some portion that is a hard option. So which we will get clarity on, but there is full intention for the client to take the space. So the hard option will be valid till Q3 of FY25. And regards with 5% on the portfolio, yes, there's full efforts to ensure that we try to lease it this quarter, but within the next 1 to 2 quarters, it should be fully leased.
Okay, fine. The second question, now you have unveiled this plan of this commercial and hotel projects, right? Almost 6 million square feet of total area. Now, could you just help us understand which would be the larger projects among these? What would be our strategy in terms of lease and strata? And what is the capex you would require? What is the sort of funding plan? Would you look for strategic partnerships like we have done in the past? And what would be the indicative rental yield, or if you could just help us guide us on this entire, whatever, say, probably the next 3-4 years? Yeah, thank you.
Yeah, I think the big projects are in Padmini Tech Valley and Brigade Tech Boulevard, and of course Brigade Neopolis in Hyderabad. So Padmini Tech Valley is in Bangalore, Brigade Tech Boulevard is in Chennai, and Brigade Neopolis is in Hyderabad. There are some smaller projects which are also part of larger mixed-use developments. In terms of retail also, as you know, we will be setting up a mall, a lifestyle destination mall in Brigade Neopolis in Hyderabad. And with regards to the hotels, they will be spread across Hyderabad, Chennai and Bangalore as well. With regards to hospitality, as discussed earlier, we are internally discussing what is the best way forward for the growth capital that we might need. And with regards to office, we are always open to discussing with people, but as of now, we are able to handle the requirements through internal accruals. As you know, most of our capex is 80% LRD, and as we continue to lease, some of those funds will become available to us. And yeah, so I think I answered most of your questions.
Okay. So just from my end, so around the 3,000 crores capex for the 6 million square feet is a reasonable number to go with for the total area?
Yes, it's around that.
And this is over a period of around 4 years, right?
That's right. That's right.
Okay,
yeah,
fine.
Typically, it will require about a year for design development and approvals, and then about 3.5 years for construction.
Okay. And just one final housekeeping question. The Chennai launch on Mount Road, that is slated for this quarter, or it may spill over to next year? That is just...
It is, hi, Ajit, Pradyumna here. So it is expected to be launched by Q1.
Q1, FY25. Okay. Fine. Okay. Thank you and all the best.
Thank you.
Thank you.
Participants who wishes to ask questions may please press star and 1 now. The next question is from the line of Pritesh Seth from Motilal Oswal. Please go ahead. Mr. Seth, I have unmuted your line.
Yeah, I'm there. Thank you. Hi all. So, first question is on, the launches related for fourth quarter. What's the size and the value of launches which are planned in fourth quarter, considering Chennai is now delayed by a quarter?
Yeah. So for the upcoming quarter, we have around 2.6 million square feet that is expected to be launched. The entire launch will be based in Bangalore. It's part of 2 existing projects in the sense that we've already launched and sold out of the plotted project, which is one of them. We already have RERA for that, and that's underway. And another 2 blocks in our Brigade El Dorado Township. So we're really confident of the demand that's on ground for these 2. And as I mentioned earlier, the contribution from these projects to help us achieve our sales target for FY24. As Pradyumna mentioned, the Mount Road launch will actually move into Q1, although we have very good visibility of the approvals and so on. But I think that's going to slip into April also.
Sure. So value of these 2.6 million square feet should be 1,500 to 2,000 crores? Can you do that?
Yeah, it could be a little bit more. Yeah.
Okay.
You said 1,500. I have around 1,800 crores or so.
Sure. Yeah, got it. Second question is on your residential gross margins, which have been tepid in last 2-3 quarters. When can we expect that improvement to come? This is regards to gross margins and not EBITDA margins. So where should we see the improvement coming in? Because earlier we have clocked like over 30% kind of gross margins.
Aditya, Atul here. So definitely from next quarter you will see that increase in EBITDA margins, and this is also an aberration because we had finished one of the project where it was a mixed use project where there was a commercial as well as residential, and construction cost was higher. That's why it's showing a lower margin, but going forward definitely this will go up to 20-25% what we were discussing earlier.
Sure. Got it. And just one last bookkeeping, if you can provide breakup of collections between residential, commercial, like you always do.
Yeah. Just note down, residential is around 933 crores. Commercial sale is 41 crores. That combines the real estate collections. Commercial lease is 161 crore. Retail is 55 crores. Hospitality is 142 crores. And maintenance and PMS is around 62 crores. Total 1394 crores.
Sure. And sorry, just one last before I move on. On the capital raise plans, 1,500 crore, what is the kind of mix you are looking at between debt and equity? Is it largely for the CapEx that is coming up, or you are looking to build some residential pipeline and hence need this capital raise? So if you can elaborate on that.
See, it will be definitely both mix of equity and debt. Of course, as you were saying, Nirpa was talking about 3,000 crores of investment. We have got lot of LRDs which we can take right now, more than 1,000 crores. So that is there, and of course, we can raise construction finance. So it is only enabling resolution. We will see as to when the money is required, and then we will see as to what is to be done.
Sure, got it. That's very helpful, and all the best, and thanks for elaborating your growth plans across all the segments. All the best for future. Thank you.
Thank you. We'll take the next question from the line of Rakesh from Monarch AIF. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, a couple of questions from my side. First, coming to the debt part, debt that is under leasing segment has increased from 3,200 crore in Q4 FY23 to 3,800 crore. Just wanted to know any reason for increase in debt?
So, a lot of money is going into construction and land buying. So the money we have used is mainly there.
Okay. Construction as well as the land bank, new purchase of land bank.
Yeah.
Okay.
And it's also mostly LRD.
Yes.
LRD.
In fact, second question, in the books, in the PPT we have shown we have a 1,562 crore cash in the books. Just wanted to know the bifurcation of the cash. How much cash we can use for new land acquisition in the coming years or coming quarters?
So see, maximum cash is in RERA account, so it has to be used in the construction of properties around out of 1,100 to 1,100 crores are lying in RERA account, which is being used in construction. Rest around 200 to 300 crores is what we can use for land bank. But this is a regular cash generation. You just see we'll be crossing around 5,500 crores of collection this year, and so there will be a lot of free cash flows which will be there from Resi, which will be used for the land bank.
Okay. Okay, sir. And sir, we have talked about the 10 million square feet launch in the coming fourth quarter. It will be great if you can share the GDV of those 10 million as well and share of Brigade. That will be helpful.
Yeah. Hi. So we communicated around a 10.8 million square feet of residential launch. That GDV should be about 10,000 crores, and predominantly at least 9,000 crores of that is Brigade share.
Just confirming the amount, 9,000 crore?
Yeah. 9,000 crores will be Brigade share.
Okay.
That's substantial number of the properties are owned by Brigade and not in JD, so that's why you see a higher share.
Okay. One last question from my side with respect to the new business development. So how are you getting the land parcels? How the deals with respect to the land parcel are happening? Because whatever we are reading in the newspaper or the articles, they are saying the land because of an increase in demand for the land, it's very difficult, or the land prices are coming at a higher prices. Your view on that?
Yeah. Hi, Pradyumna here. So as far as land itself goes, naturally Brigade is a very reputed developer, therefore, there is automatic traction to us. So whether it's landowners, whether it is IPCs, agents, they naturally gravitate towards us to offer land. As you know, about 50 to 60% of our land is acquired either by way of joint developments or by way of purchase. So typically being a preferred partner, we do get most of our lands directly at our doorstep. But at the same time, we are focusing on certain micro markets that we want to be in, whether it's in Bangalore, Chennai or Hyderabad. And we then go out with that kind of a focused approach.
And the CapEx that is planned for the 4 commercial towers that is around the range of 2,500 to 3,000 crore will be through debt only, like LDR.
I'm sorry to interrupt, but can you be a little clearer? I'm not able to hear you clearly.
Okay, so I'll repeat the question. So the amount of 2,500 to 3,000 crore capex that is aligned for the upcoming commercial development as well as the hotel development, that will be done via debt through LDR, LRD loans.
So I think Nirupa has already replied to that these are all combination of factors. Therefore, of course, we have our LRD potential, which I had said around 1,000 crores or more. There will be construction loan, which will be taken at least 50% of cost. You can take as a construction loan, which will be used during the time of construction. And of course, she has said that we are looking for partners. If there are good partners, willing partners, then maybe we can do a joint venture also in any of these hotels. So that is a way which we are going to work.
Okay. Thank you very much and best wishes.
Thank you.
Before we take the next question, a reminder to all the participants that you may please press star and 1 to ask questions. The next question is from the line of Parvez Qazi from Nuvama Group. Please go ahead.
Hi, good afternoon everyone and congratulations for a great set of numbers. So my first question is regarding the prices. Obviously, you as well as all of your peers have seen significant increase in ASPs over the last couple of years, partly due to the demand supply scenario and partly also due to the premiumization that we are seeing in the industry. Now, I know, would be difficult to say it in data terms, but in your sense, what contribution of price increase over the last couple of years would have come due to the premiumization of sales or basically due to customers moving towards higher value ticket items?
Hi. So there's a lot of reasons, as you mentioned. Generally, even going through a few years back, the movement of projects from the 12% to 5% GST regime itself resulted in inherent price increase. And then over the last, I would say, 18 to 24 months, specifically in Bangalore, we have seen the dramatic price increase for the same kind of product. So we have not necessarily made our product more premium, but due to customer demand and what we feel is probably the Bangalore, I think, has been significantly priced less than certain other markets despite the growth of the city. So I think that has actually been coming through over the last 2 years, and you've seen that grow dramatically. Also, we moved into Chennai and Hyderabad with some launches over the last couple of years. That has also increased our average price realization in the portfolio. And very recently, in this past quarter, we launched Brigade Sanctuary. That is actually one of our premiumized projects that we have. Premiumized in the sense that it's slightly better specs than the mid-segment products. So I think from there, we have also seen a dramatic price increase in the APR. So hope that answers the question. Going forward also, given the kind of product mix that we have, we will continue to see just the average selling price generally being higher. That said, if we do have plotted product, etc., that's getting full, you could see a temporary decrease in the average number.
Sure. My second question is on the business development. Now, over the last 1.5 years, we have added substantial amount of projects to our pipeline, etc. So what are our thoughts on the BD front going ahead? Do we see these trends moderating, or considering the improvement in sales trajectory, we expect that this will continue at the same run rate?
The momentum will continue, Parvez, because, we are actually, as we acquire land, we are also launching various parcels, like Bhavit also mentioned, 10.8 million square feet in just residential, and then 5 million square feet in office retail, and 1 million square feet of hotels. So we will be replenishing the land bank, certainly. But over and above that, one has to grow. So we will focus on all three markets, Bangalore, Chennai, and Hyderabad. And we expect the momentum on BD to continue as we are witnessing for the last year or so.
Sure. And two questions for Atul, sir. Sir, what were the rentals in BTG and WTC this quarter? And what is the pending land payment that we need to make?
Okay. One second. So, this month, you want leasing revenue, na? So, in Tech Garden, it was 49 crores. Yeah, 2-3. And in Chennai, PREPL, it was 38 crores. And the pending land payments are around 1,194 crores.
Sure, sir. Thanks and all the best.
Thank you.
Thank you. Participants who wishes to ask questions may please press star and one now. We'll take the next question from the line of Rakesh from Monarch AIF. Please go ahead.
Hi.
Yes.
Hi. Thank you for the follow-up opportunity. One question regarding the commercial leasing segment. In FY25, we are supposed to launch a Brigade Twin Tower with a area of 1.3 million square feet. Any update with respect to the pre-leasing on this project? Like how much leasing has been done in this project?
Yes, we will be launching that in Q1 of FY25. We've already started showing the project around to large corporates. So it will take its natural progression because the project still needs to get OC. So we are putting in a lot of effort to ensure that we try and get it leased as fast as possible.
Any guidance, like any timeline that we are looking to fully lease out this project, maybe 1 year, next 1 year, anything?
Yeah, ideally within the next 1 year, ideally in FY25.
Yeah, thank you. So for the next 4 quarters, we know the GDV of the project is 10,000 crores. Just wanted to know what will be the GDV in the coming years, because we have guided with we will be launching around 9 to 10 million square feet new lands, a new area for the upcoming years also. So can we assume the GDV will be also similar or it will be higher?
So yeah, it should be higher, but again, it's dependent on the kind of product that is being released. So if it's based on that and in the markets that we have as well. We always mention the GDV for the next 4 quarters because we have absolute clarity as to pricing and what the product is. But other than that, I mean, we have the overall land bank that we have, which could get into the pipeline over the next 4 to 5 years.
Okay. Thanks for that detailed answer. Thank you very much and best wishes.
Thank you. You may press star and one to ask questions. The next question is from the line of Adhidev Chattopadhyay from ICICI Securities. Please go ahead.
Yeah, thank you for the follow-up. The question is on the pending land payments of around 1,100 crores, or how much is due in the fourth quarter?
Fourth quarter, I think out of this 1194, we should do around 200 to 250 crores of the land.
200, 250. Okay, answer?
200 to 250 crores, yeah.
Okay, sir, and the balance payments which we'll have for next year is for which project? Majorly, the 1,000 odd crores, which will spill over to probably next year.
I'll not specify the project because, but I can tell you that around Chennai, it should be in the range of 600 crores and Bangalore around 500 crores. This is the overall breakup of this.
Okay, fine. And so just referring to your presentation again, where you give the debt breakup segmental, is there a typo in the SPV partner share of the net debt? What shows going up from 637 to 935 crores in September and again falling to 663 crores in this quarter.
No, it's okay. It's right only.
Could you just explain why this has happened? Slide 20. Slide.
See, because of the PRETL, we have been taken more already on cash flow.
So it's majorly due to increase of the RERA money in duties to residences, which has been more allocated to the SPV. That's the reason for reduction in SPV partner share of it.
Yeah.
Okay, fine. Okay, that is the thing. Okay, fine. Got it. Okay, thank you.
Thank you. Anyone who wishes to ask questions may press star and 1 now. Ladies and gentlemen, as that was the last question, I would now like to hand the conference over to Ms. Pavitra Shankar, Managing Director, for closing comments. Over to you, ma'am.
Thanks. Before we close, just wanted to share a few other highlights. Our not-for-profit trust Brigade Foundation has taken up renovation work on the Venkatappa Art Gallery in Bengaluru. This is in collaboration with the Government of Karnataka, Department of Archaeology, Museums and Heritage. This is to renovate the renowned gallery and contribute to enhancing the existing rich history of art and culture in Karnataka. Our not-for-profit 100-bed St. John's Medical College Hospital at the 60-acre Brigade Meadows Township is nearing completion. This state-of-the-art hospital is a 35 crore project, an initiative of the Brigade Foundation, and will be one of the largest integrated healthcare providers in Bangalore, contributing significantly to the healthcare needs of South Bangalore. Pavitra Shankar received the Woman Achiever in the Real Estate Sector Award at the ACE Alpha Awards 2023, while Nirupa Shankar was recognized as a Woman Leader in Commercial Real Estate at Commercial Design Awards 2023. Brigade won 4 awards at the 15th Realty Plus Excellence Awards 2023 South for various differentiated marketing campaigns. Brigade REIT, Asia's first PropTech accelerator program, hosted its annual flagship summit, Propagate 2023. It brought together industry thought leaders, key influencers and startups from across the country to share knowledge and best practices through deliberations and panel discussions. With that, we now wrap up our Q3 FY24 analyst call. Thank you all for taking the time to hear from us today.
Thank you, members of the management. On behalf of Brigade Enterprises Limited, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.